Hey guys, how's it going? Welcome to Black Coffee Finance. My name is Henry, and today we're going to be talking about everything you need to know about savings accounts. Last week I covered checking accounts in depth, and this week I wanted to cover savings accounts, which can be a great complement to checking accounts and can serve as peace of mind for people who use them as a cash reserve. A savings account is similar to a checking account in some ways. Both are opened with a bank or credit union and both hold cash. However, you can't use a savings account to pay for things with checks or a debit card like you can with a checking account. And this isn't really the purpose behind a savings account anyway. A savings account is generally goal-oriented, and it's something you're going to make small, consistent contributions into, and then either keep the money in the account to be used as an emergency fund, or sometimes the funds will be pulled all at once to be used for a larger purchase like a house down payment, a car, college expenses, vacations, etc. Savings accounts can be opened in much the same way as checking accounts, which I covered in a previous video. Those include opening an account in person at a bank or credit union, over the phone, and the easiest way is probably just to open it online. The bank you're going with is usually going to need some form of government ID like a driver's license, a date of birth, a physical address, a social security number, and possibly an opening balance as well. So you can open as many savings accounts as you want, or as many that fit your goals and needs. But if you choose to just open one account, it might be a good idea to open it at the same bank that you use for your checking account, because when you do that, you can link the savings account to the checking account. And that way, if you accidentally pay too much from your checking account, the funds that are required for the purchase will just be pulled from your savings account and you can avoid the overdraft fee. One important use of a savings account that I mentioned earlier was to be used as an emergency fund. So an emergency fund is money set aside for unexpected expenses such as medical bills, car repairs, home repairs, possibly job loss. You could kind of think of an emergency fund as self-insurance. Basically, in the event of some sort of emergency, you're going to have money to cover your expenses for a while. By building up an emergency fund, you're most likely never going to be put in the position where you have to pay bills late or take out debt to pay a bill that should otherwise be manageable. The recommendations for how much you should put in an emergency fund vary person to person. Some people will say 3 to 6 months or 6 to 12 months. Some people will even say 1 year to 2 years worth of expenses. Personally, I try to just keep about 3 months worth of expenses saved up. I don't necessarily think it's wrong to keep more than 3 months worth of expenses saved up. I just personally don't like to keep that much in cash because I can earn more on that money by investing it in stocks in a brokerage account. One point of emphasis that I want to make is that you should base your emergency fund on expenses and not income. Your income is not an important metric for determining how long a sum of money will last you if your expenses are larger than your income. So ideally, your income will be higher than your expenses, but this is a distinction I wanted to make because I've seen some people recommend, for example, saving 6 months of income. But if your expenses are twice as much as your income, then 6 months of income is only going to last you 3 months. So up until recently, savings accounts used to have a limitation that only allowed 6 withdrawals per month. The idea behind this was that it allowed banks to maintain reserve requirements, but also that savings accounts weren't really meant to be used for regular transactions and purchases. It's meant to be used as a storage of cash. This restriction, called Regulation D, was lifted in 2020 in the midst of the pandemic to help make it easier for cash-strapped people to pay bills on time rather than worrying about going over arbitrary withdrawal limits. I wouldn't necessarily say that savings accounts are essential, but they can be a useful tool for people to keep their finances better organized and to help people make consistent contributions. Setting up automatic monthly or weekly contributions can be a great way to make sure that you're paying yourself first and progressing towards your goals. If you were stockpiling all of your money into a checking account, it could be easy to lose track of how much money you're setting aside for a house down payment or a car payment. But if you allocate a specific amount of money into a savings account on a weekly or monthly basis for these purchases, it's much easier to track your progress. And it can also be beneficial psychologically to be able to see that amount grow over time. And in fact, if you have multiple purchases that you want to save for at the same time, I would even recommend opening multiple savings accounts. Most banks will even let you name your account. So instead of the random number that's generated for it, you could name it car fund or college tuition. This does a few things for you. It makes it less tempting and it requires more effort to pull money from the account. And you can set up automatic deposits to each account, which ensures that you pay yourself first and make consistent progress towards your goals. Another benefit of opening a savings account as opposed to just keeping all your extra cash in a checking account is that savings accounts will at least offer a little bit of interest on your money. As I covered in the last video, most checking accounts offer little to no interest. So at least with a savings account, your money is gaining some value over time, although you could argue with inflation that it's probably still losing value. The cherry on top is that a lot of banks will offer one-time bonuses, sort of like with the checking accounts that we covered last time. Just make sure beforehand, though, that you can meet the requirements because some of the deposit amounts are pretty high. Let's take a look at some of the savings account offers available right now. On this page, they're showing the current best savings accounts. So these are primarily going to be online accounts only. And that's just because they tend to be able to offer the best interest rates. And that's something I mentioned previously in the checking account video. And it holds true for savings accounts as well. Currently, the average is right around the 0.5% interest rate mark, with some being higher and some lower. Just choose whichever company you're comfortable with. Maybe read some reviews online. I've personally had good experience with PenFed. I've heard a lot of people say that they like using Ally. American Express is a pretty highly reputed company, as well as like Discover, which is not on this page, but I know they offer savings accounts as well. If you're going to be using more than one savings account, I would definitely recommend using one of these online only banks. You're just generally going to get a better interest rate. Then if we hop over to bankrate.com, they're going to have a similar looking list. Both of these sites are nice because it shows you the minimum balance that's required. This one shows you the estimated annual earnings, and this is based on a $25,000 deposit. So it's not a whole lot of money, but it is a lot better than nothing. And you can just have peace of mind because you know that this is guaranteed returns. You're for sure not going to lose any money like you could with the stock market. So as you can see, there are lots of options, and you just got to choose whichever one best meets your needs. So in my opinion, opening a savings account should be very goal-oriented. My wife and I do have a savings account that we opened a couple of years ago when we were starting to save for a house. And back then, interest rates were much better than they are now. At the time we opened it, if we had a balance above $10,000, we would earn 2% interest annually. So towards the later months of saving for the house, we were getting like $100 every month into the account, which was pretty nice. It's a couple of years later now and the interest rates are much lower. Right now it's sitting at like 0.5%. So we only keep 3 months expenses in our savings account at any time. And then there's a month's worth of expenses in our checking and the rest just gets funneled to our brokerage accounts where it can be invested and potentially earn more money. So my final thoughts for savings accounts are, if you're going to open one, maybe consider opening it with the bank that you have your checking account with and linking the two accounts. Consider opening more than one savings account if you're going to be saving for multiple items, and name those accounts, set up automatic deposits. When you aren't currently saving for big purchases, maybe consider just having an emergency fund and keeping the rest of your money elsewhere. If you open up more than one savings account, consider opening it with a different bank, maybe an online bank, because those tend to have higher interest rates. And if the funds are at a separate institution, it might be less tempting to pull them from those accounts to pay for everyday purchases. So that's about everything I wanted to cover in this video. If you enjoyed what you saw, a quick like and subscribe would be much appreciated. In an upcoming video, we're going to be talking about credit cards, which is one of my favorite topics. It may take a couple videos because there's a lot to go over. Between now and then, I may cover a specific stock or two that I'm excited about, so stay tuned for that. So thanks for watching, everybody, and we'll see you next time on Black Coffee Finance.